me. He's like, hey man, I don't know how to tell you this, but I'm standing outside your property and it's burned down. He's like, there's like 5 or 6 fire trucks out here. There's flames coming out the roof. And I'm like, yeah, exactly. What? It's gone.
Oh, I am fascinated and always trust you with investors because you invest yourself.
Sure.
Where's the where do those paths intersect?
Welcome back to the Roots Podcast. I am Tyler Lingle and I'm with my co-host Max Moore, and today we have on Seth Wilcock.
Seth is an experienced mortgage advisor with over 10 years in the game, helping first-time homebuyers break in, a VA loan specialist. Veterans Day was yesterday. Shout out to all the veterans out there. Use Seth if you want to buy a house. Investors, families, anybody wanting to achieve real estate goals that they've set, Seth is your guy to get the loan and to get into the door. He's ranked among the top 1% of U.S. originators with Resolute Lending, powered by the powered by the independent mortgage brokers. He's passionate about helping people build financial freedom and legacy and wealth and plant roots wherever they're at. His values align pretty similar to Roots. So Seth, welcome to the show.
Yeah, thank you guys so much for having me on. It's a pleasure to be here for sure.
Great. We're going to jump right into it. And the question I have for you, well, we do a planting roots section of the podcast, which is just like 3 questions straight off the dome. So first question for you is, if you had $50K and you're just fresh off the block, haven't made an investment in anything, what would you do with it?
So I have a couple ideas, I think, of what I would do with that. One of the, can I say 2 ideas? Is that okay?
Absolutely.
Yeah, we'll allow it.
All right. So the first idea, I would take some of that money and I would probably invest that in educating myself to learn skills like framing, electrical work, plumbing. And I say that because I don't feel like there's a lot of skilled tradespeople out there. And I've found that learning that stuff over the years has been very valuable to me in terms of like fixing up some of the properties that I've had, talking to contractors. So use some of that money to invest in yourself, build up your skill set, and then also maybe buy some tools. You can get by with, let's say that costs like $5 to $10 to go to trade school and figure out some of those skills. The rest of it, use to go buy a property and fix it up, flip it, trade up, and just keep going. So that'd be the first thing I would do. The second thing, this is something I've just been looking at a little bit lately. Have you guys seen some of those Amazon houses that they're selling for like $10,000? They're like little houses and they're just, these prepackaged.
Like pod.
Yeah, exactly.
A legit house.
Yeah, like a house, like 10, 15 grand. And it's probably not going to have all the plumbing and everything, but it's just like a prefab house.
Right.
Ship it out. Maybe you could use some of that cash to go buy a lot somewhere, build a house on it, get it connected, and rent it out. I don't know. Or live in it, whatever you want to do with it. But I don't know. That's been something I've been exploring.
Buy some cheap land.
I feel like in Dallas, the prefab homes are in Texas. When we were out in Texas in Austin, not Dallas, in Austin, the prefab home was like a thing.
Huh.
They were just taking it would be a 3-level home. I see it on YouTube. They stack them and they just build these houses. Now those are worth like $1 million when they're done. Wow. But it's outrageous how cheap, cost effective.
Just like I think it's going to be a huge thing.
Yeah.
I mean, it's the affordable way to do it anymore. Right. And I don't know. I've just been blown away looking at some of these houses because they're awesome. Like they're like 2-bed, 3-bedroom houses for super cheap. And they just ship it out on a truck. All you got to do is assemble it.
That's wild. That's wild to even imagine. It's like a playhouse when I was a kid in the backyard.
Right, exactly.
But it's a real home. I like the sweaty startup. That isn't an answer that we've gotten yet. It's been like take $50K, go through it in the stock market and wait has been one of the answers, and a couple different in that same lane or house hacking or similar. But I like the idea of you really could go to YouTube and learn a lot of DIY stuff. Like the people who are making it with low money to get in are the ones that are trading up, and they're doing a lot of the work themselves. I say, like, if you want to burr in 2025, well, you got to get a hammer and go knock down the walls yourself. Sure. You can't hire a contractor. You immediately just lost all profitability or runway there. So, yeah,
I admire, like, I'm sure you know who Brittany Arneson is.
Mm-hmm.
Yeah. I mean, just her journey. I mean, she learned how to do all this stuff from the ground up. And I think there's a ton of value in that. I mean, you look at high schools, they took out shop. You know, and look at the quality of houses being built. I think that's a direct correlation to like nobody being passionate about trades anymore. Right. So I think there's a lot of demand for tradespeople. I think you can make a lot of money in that field. You can learn a lot of skills, and obviously that can help you flip houses and acquire a real estate empire with a huge competitive advantage.
Yeah, if you combine the sweat equity with the knowledge, it's huge. Mm-hmm. If you had a billboard in Indy for a week, what would it say?
I would say the Fed rate cuts do not correlate to mortgage rate cuts, because I can't tell you how many calls I get all the time. Hey, I heard the Fed dropped rates, and it's like, well, they did, but you know, it's been priced into the market.
Aren't they meeting today? Isn't something going to happen?
Educated on that.
Yeah.
No, you'd be surprised. I mean, even
bad.
Yeah, it's that's my big glaring message I want to get out is like the Fed rate cuts aren't mortgage rates.
My favorite is when the Fed does cut rates, and I see mortgage brokers start posting. If your realtor is calling you saying that rates dropped last night, fire them and hire a new one.
Doesn't work that way.
Oh, it's bad. It's bad.
They've actually gone up. The 3 last
cuts.
Fed cuts,
Yes.
the mortgage rates have gone up. Right.
That's exactly right. They cut rates, and then there's always a press conference that follows those rate cuts, and as soon as Jerome Powell starts talking, he has a hawkish tone, man. That's what does
right.
does it.
It's the markets. It's all the expectation.
That's right.
That's right. It's fun rough stuff. If you could describe Indy in one word, what would it be?
Indy in one word. I would say opportunity. Mm-hmm. I feel like there is a ton of growth potential here. I mean, to me, it's kind of exciting, you know, being from Denver, just driving through the city and seeing all the cranes and all the new construction going on. To me, that's like reminiscent of what Denver used to be before it got, you know, super crowded and overpopulated. So I don't know. It's exciting. It's exciting to see all the growth that's happening here. It's exciting to see all the companies that are moving here. It's a very diverse job economy. So I don't know. I would say opportunity. There's wherever you look, I think there's something for everybody.
When you jumped in to lending,
yep.
Was it the economics of it that excited you? Was it the people getting home loans? Talk to me about the early days on why being a lender is the path that you chose.
I don't know if I would say that lending, or if I chose lending, but lending definitely chose me, you know? I mean, I was a finance major in college, and I knew I always wanted to do something with my degree. I had so many friends that would go to school, get a degree, and it was basically worthless, or they weren't, you know, using their degree and like what they graduated in. So I knew I wanted to go into finance. I was always passionate about finance. Read a lot of David Bach, Dave Ramsey, Susie Orman, you know, just personal finance experts. So finance was just always a passion of mine. And honestly, at that point, I was just looking for a career change, and I responded to an ad on Craigslist. And I went and interviewed with a company in Denver, and interviewed with the president of the company, which was a very intimidating interview, to say the least. But I got the job and kind of learned it from the ground up. I mean, I knew nothing about mortgage other than, you know, I'd bought a house a year before. Obviously knew a mortgage was a way to finance a house, but I didn't really know all the ins and outs or like what went into it. Started out as a transaction coordinator, assisting processors. Then it went into being like a loan officer assistant. And I mean, kind of the rest is history, but it's definitely something that I learned is a very powerful wealth building tool when you use it the right way.
I am fascinated and always trust you with investors because you invest yourself.
Sure.
Where's the where do those paths intersect?
Yeah, I mean, I would say just after my first home purchase, which was a condo. You know, I bought the condo in 2009, which was like kind of the bottom of the market. It was like right after the crash. I mean,
good time to buy.
Yeah, you couldn't sell a house to save your life,
right.
You know. And actually, the house that I offered on was originally listed at like $115,000. So we got a huge price reduction when we bought. I think the government had like an $8,000 tax credit incentive in play. All you had to do was live in the house for 5 years, and all of that money was forgiven. So basically got into that first place with no money down. And shortly thereafter, you know, bills were a little bit tight because I had a mortgage all of a sudden. And I was like, okay, I can get a roommate. So I called up my buddy, and he was looking for a place to live. And I think he was renting a bedroom for $450 a month. And it was great. I mean, that was before house hacking was coined, you know, or any of that. I was just like, hey, this is great. You know, he just pays me rent every month. So yeah.
Basic economics, right?
Yep.
Right. Whatever lowers my bills and the pressure.
Right.
And I just remember driving home from work every day, and I was like, this is pretty cool. I don't have to do anything, and I get a check that helps out with the bills every month. So it's pretty cool.
I saw a post yesterday. It was like, paying rent is hard, paying mortgages is hard. Choose your hard.
That's right.
And, you know, being if you would have rented that same condo, you likely still would have had a roommate. So getting
True
into
story.
it, right? Like no matter what, you're going to end up in the situation you're in, except for the equity position, I imagine is much greater. So living in there, and then did you just see the equity start to build, and that opened the door to, I want to invest and start to own?
Absolutely. I mean, that was just like that little seed that, you planted and sprouted, and it's like, okay, I can actually make some money doing this. And I don't know, kind of the rest is history. I mean, there is a story there, but yeah.
Yeah. What is your, what's kind of the favorite investment property that you own?
My most favorite. That's a good
You've
question.
answered this before.
Have I?
I've heard your answer, and I'm curious which one, because you have like 16 now, I think, properties, or
I don't know, something like that. I have to count them.
20 units or something.
Yeah, I'd say we're up to 20 units right now. I'd have to count how many properties, but I've definitely done some amazing real estate deals. There's been a little bit of luck involved with some of these. There's been a little bit of planning. I would say one of the best deals I ever did was a house that I bought from a wholesaler. My realtor at the time, God rest his soul, he died earlier this year, unfortunately. But he found this great deal. It was a $23,000 house, and it was rented for $650 a month. And at the time, I was like, shoot, 2% rule? Like, why wouldn't I do that?
Yeah.
Right?
I get 2.
It was a no-brainer. Exactly. I was like, let's go. So we closed on it, and throughout the process, the tenants had been living in the house for like 5+ years, maybe even longer. I'm not really sure. The seller, owner, whatever, he hadn't done anything with the property and was pretty dilapidated. Whatever, tenants are living there; they're perfectly fine living there. He had spent like the security deposit. He didn't have a lease executed. I mean, nothing. It was just a poorly run property, and he just wanted the cash. So I was throughout the process, I'm trying to get the tenants to sign a lease, and for one reason or another, there was always an excuse. They couldn't do it. And one day I get a call from my realtor, it's like 40 some odd days after I closed on the property. I get a call, and he's like, hey, I'm going to reach out to you here soon. You're going to want to answer the phone. So I pick up, and he's like, hey, man, I don't know how to tell you this, but I'm standing outside your property, and it's burned down. He's like, there's like 5 or 6 fire trucks out here. There's flames coming out the roof. And I'm like, yeah, exactly. What?
It's gone.
So that was, I didn't really know what to say. I mean, this is like 2020 that this happened. I had loans coming out of my ears. I didn't have time to sleep really. And
the busiest time in your professional career, and you heard that one of your rentals is literally on fire.
A literary fire.
Yeah.
Burning.
Like we referenced to everything's burning and going down to shit. Right. And you're like, no, my house is actually on fire.
It was a total loss. Yeah. And so I'm still talking to my realtor on the phone. He's like, oh, hold on a second, man. There's a body bag coming out. I'm going to call you back. And he like hangs up. And I'm like, what? So he calls me back like 20, 30 minutes later. He's like, hey, it's nothing to worry about. But unfortunately, the tenant's dog was in the property, and the dog died. I know. And I felt so bad because it was the dog. But
poor Benji.
So throughout all of this, like we had the fire department out there. We had, eventually, an insurance adjuster go out. That was actually one of the first things I did too, was like look at my insurance policy. Do I have good enough insurance on this? And we couldn't figure out what happened. Like the firemen couldn't figure it out. The insurance adjuster couldn't figure it out. Nobody knows what happened to start the fire, like to this day. And I have a hard time thinking, because my first thought was the tenants did it because they were pissed about signing the lease. But for their dog to be in the property when it happened, both of them were at work when it happened. It's just weird.
Doesn't make a lot of sense.
Yeah. So anyway,
dog was playing with matches or something.
Maybe a candle got knocked. I mean, who knows, right?
Who knows?
Right.
Anyway, the insurance ended up paying like $85,000 roughly on that. So 30, 45 days later, $23,000 purchase, $85,000 insurance check. That was probably one of the best deals I ever did.
Wow. Instant ROI.
I'm not saying commit arson, but
yeah, absolutely not. You did that incidentally. You were not trying to do insurance fraud.
Right.
Oh man, that's 4X again right there. Boom.
You've done a wide variety of types of investments, from buying wholesale deals and quadplexes. I would assume maybe a little lower income to short-term rentals in the mountains.
Yep.
How do you manage such a diverse real estate portfolio? And are you transitioning to one specific asset? Talk to me about that.
I think curiosity is kind of what propels me a little bit. I want to know. I mean, I talk to lots of different people. I mean, with my job, I I have clients of all different kinds of, they're looking for different things too. And I see that, what some of my clients are doing. And sometimes I have to be able to speak eloquently about certain types of investments that they're looking to make. So part of it is curiosity. Part of it is seeing what other people are doing to be successful. And then I read a lot. I study a lot. I watch a lot of YouTube videos, read a lot of books, talk to a lot of great people like yourselves. And, I just try to.
Sometimes you got to do it. That's
right.
Same for me. I think mine was like multifamily, single family, short-term rental, medium-term rental, flip in that order.
Yeah.
And everyone's like, dude, you're not going to make money. It's always specialize, beat you over the head with it, niche down. But it's like, hey, how do I know what to specialize in if I haven't done the homework?
Right.
And I think the best way to learn is to do it.
Yeah.
So kudos to you.
Yeah. No, I was reading through your portfolio and I was like, I think this is where I look back and I'm like, this is where I'm at in 5 years because it's just like trial by fire. You think that you know what you like and yeah, you got to try it out. And on top of that, one thing you said, I've had clients call and want to do Airbnb and I'm like, I know Tyler does Airbnb and I know clients that do Airbnb. So I can speak about it,
right?
But I can't speak on how it feels to own it. And that always bothers me. Like I want that expertise to be able to speak on
every
how it
2
feels.
weeks he comes to me saying he's going to buy Airbnb and I say, no, don't do it.
Yeah.
Because you're getting the hospitality business.
Right.
And I think it's a
different.
big jump into that, which it's great. Don't get me wrong. I like it. I have people to help me manage it, as I'm sure you do.
Yep.
But sometimes it's like, oh, should I have opened that cow out of that bag or not?
Yeah. He also knows what my calendar looks like.
So the short-term rental game is interesting because I think one of my fears that I had is that people were going to destroy the property because they're there for a couple nights. They don't really care. That was always like my biggest concern. And I've actually found it to be quite the opposite. I've had better luck with maintenance issues on short-term rentals than I have on the long-term.
Yeah.
Oh.
So
I would say my long-term tenants, they beat the shit out of those places. Whereas the short-term, they know, it's not theirs.
Right.
I've never thought of it that way.
Yeah.
Like I'm putting myself in the shoes of when I've been a long-term tenant. And
I have.
Yeah. It was
I actually had the outdoor furniture thrown through the front door. So I did have a bad experience on a short-term rental.
Yeah. Did you
but
get
air
it on video
cover,
at least? You could post on YouTube and make your returns.
Yeah, no, air cover is, they protect their owners very well now. Up to $1 million or something, maybe it's more at this point.
that's perfect.
Airbnb is pretty good with protection and liability.
Oh,
And
interesting.
I've experienced that. I mean, I've had people have dogs and, the dog chewed up like an ottoman one time. And I just bought a new ottoman, submitted the receipt, and they covered the full thing. Like it was no issue, right?
Yeah. They don't F around. They will help you. They don't want to lose them.
You guys are talking so casually. My brain's exploding. I didn't know that was a thing.
Oh, air cover. You gotta look it up. It's the insurance, basically.
Okay.
Right? I host everything through Evolve, and they advertise on Airbnb and VRBO and Booking.com and hotel, all these different sites, right? And they sync up the calendars, and they have a great insurance coverage policy. Like I've had zero issues whatsoever. If something goes wrong, they take care of it. So
I think my favorite thing right now is using Airbnb for medium term.
Yeah.
I do 30-day minimum. I'm doing this on
I've
one
heard
property.
That. Yeah.
30-day minimum. I'm getting lots of inquiries. My first tenant on this new group, Duplex, is staying until March. And they started in November or October.
wow.
My first tenant is staying half the year
then you
at
get the-
short-term rental rates.
But then you get the coverage. But isn't Airbnb like waxing them on fees?
they're getting waxed for sure, but it's their choosing.
What I've noticed, because I've had people do like the 30+ day bookings too.
Yeah.
What I've noticed is like some of these people travel for work and their company is paying for their housing, their lodging, whatever. Honestly, like one of the best tenants I had was like a 30-day plus guest, and he was great. I mean, he took great care of the property. He communicated well.
And they might be working all day, not actually being at the property. I have a tenant in a penthouse suite right now in this 5-unit building. He's only been there 2 times. He's a long-term tenant, 12-month lease. Company pays the lease.
Yep.
He's only been there for 2 nights since I've taken over the property for 6 months. 2 nights in the last 6 months he's been there.
Perfect. It's a dream tenant.
Like we pay
ghost tenant.
we pay the utilities, and I keep like, is this right? It's been like $20 for electric for the month because nothing's happening in the unit.
Right.
Everything's shut off.
Wow.
It's I don't get it. I don't get how people live like that. But I guess to your guys' point, maybe. All right, I'm furnishing. You convinced me.
I will say the person
Slap me
that
tomorrow.
we looked up this person because we did a background check because they were staying so long. We found out they were being evicted from their apartment.
Uh-oh.
We get scared. My property manager says, "Hey, we shouldn't do this." I said, "Hey, let me call her, talk to her." She gives me this sob story about how like the main water line was like breaking and she stopped paying rent.
Was she staying at your other property?
No. And I believed her, but she's paid rent. It's her and her husband and like a kid, and they've been great so far paying. And Airbnb doesn't let them like not pay. Like,
of course,
they have to pay to book it. So you're kind of protected with payment issues a little bit with Airbnb.
I mean, I don't know. I think there's a little bit more skin on the game for some of the short-term rental tenants as well, because you can leave them a review, and if they get too many bad reviews, I mean, eventually, if they're
platform,
exactly.
Right. So you still are in the hospitality business. You're protected by the insurance. It's the legwork that scares me. Maybe it's the midterm rental strategy that might be the
MTR is where it's at.
Yeah,
I'm
MTR.
loving MTR.
At what
Right
point
now.
do we make, like, maybe this is a good topic. What point are there too many MTRs? I feel like everybody's doing that right
They're
now.
so easy to turn into short-term rentals is the thing.
Okay, but what point is there too many short-term rentals? Like,
2022. And they've been going down since
yeah.
the number. So we'd hit that point, and then investors were like, these sucky investors that didn't operate well, that bought all their furniture from Wayfair, like, we're out of here. Like, they didn't know how to do it.
So are you seeing like the amount of inventory for short-term rentals, like people are selling those? Like there's just not as many available.
So many people are contacting us selling furnished rentals.
Interesting.
Yeah.
I don't know. I guess like at least in Colorado, depending on where you're going, 'cause that's where my a couple of my short-term rentals are. I feel like it's been too saturated. I've been watching like the nightly rates dip a little bit more.
Competing next door.
Yep. I've just been watching like costs go up. You know, some of the laws, proposed laws that are coming into play about, what is it, like the hotel transient tax, or trying to tax, small mom and pop landlords at the same rate as like these large hotel chains. And it's like, it makes me a little nervous. But that's a Colorado thing. It might be, Indiana's a totally different market. This is probably a good time to get into short term.
Well, I think with Colorado, you have the natural thing to travel to, which is the mountains for ski and for, you're not coming to Indy for that. You're coming to Indy for a purpose.
Sure.
It's not like just travel for vacation.
Well, there's like so many hospitals and healthcare. I mean, that's a major part of Indy's infrastructure. So you guys get a ton of traveling nurses. I mean, this is a great MTR market.
Yeah. Right. And I think that's why a lot of those have switched over towards MTR. The STR demo seems to be more of the corporate coming in for a weekend, going to Lily or whatever.
Yep.
And those ones you do have to be on.
So
you have to have.
I will say
hospitality.
that our investors that did it in struggling areas are not doing well with MTR. So you do need to get the right asset and the right location to do well. Because there's a lot of people who are like, oh yeah, I'm going to buy this $150,000 piece of crap. And then they sell it in 2 years because it was not.
Yeah, they
It didn't perform as well as they thought it was going to.
Right.
And that's the thing. Like you always have to have a little bit of an exit plan. I mean, one of the short-term rentals we bought, we got kind of scrappy with furnishing it because. So we're on our third short-term rental at this point. The first one we bought came fully furnished, which was easy. I mean, and he had like the scripts that he sent me. He gave me his cleaner, who I still use to this day. Like just handed over the keys to the
pampered,
kingdom.
man.
Dude, it was
did
great.
all that. It sucked.
I had to learn through the school of hard knocks, you know? The second one was different. The second one, they moved out. It was not furnished. And I realized very quickly how expensive furnishing a short-term rental is going to be. But we just went on Facebook Marketplace and Craigslist, and we were trying to find like free stuff because people throw out like mattresses, beds, dressers, whatever. So we were able to get that done on the cheap just by picking up a ton of free stuff, honestly. I mean, there were a couple of things that we did, like the artwork and the decor and the pillows and whatever. Obviously like plates and silverware, we went and bought those things. But anything you can do to furnish your short-term rental on the cheap is the way to go.
Yeah. I have a curiosity around the 5 profit centers. Sure. When you're thinking about your portfolio or investors that you're helping get mortgages, what do you think is the best, and where should you put the most priority on being principal pay down, equity, cash flow, tax?
We just talked about it with the 50-year mortgage, which we don't need to get into necessarily. But answer his question first.
I think just a common mistake, I guess, or just something that a lot of people don't know about or really think enough about is the capital gains tax exemption. I get so many clients that want to buy, their next house, a third house, whatever, and they want to convert, their first house into a rental property.
Yeah.
A lot of times I don't think that makes the most amount of sense.
I don't know if it ever makes any sense.
Very rare cases. I mean, you have to live there for a long time for rental rates to catch up to actually be cash flow positive.
Yeah.
But the biggest thing that I don't see people thinking about, and all of this comes from my tax planner. I've had a great CPA for like 10 plus years, and I've learned a lot through him, is that capital gains tax exemption. So let's say, the rule is if you lived in the property for 2 out of the past 5 years, you can sell it and take pretty much all of that gain tax-free, up to $250,000 for a single filer, up to $500,000 for a married couple filing jointly. Well, once you've converted it to a rental, right? Let's say it's been a rental for 1 out of the past 5, and it's been your primary for 4 out of the past 5. 20% of the time, it has been a long-term rental property or an investment property. So therefore, 20% of that gain is now exposed to capital gains tax. 2 years a rental, 40% of that gain is now exposed to capital gains tax, right? And eventually, it just starts eating away at this return that you've built up for years.
Once you
years
get to 3, it's like it doesn't matter. You have to be there for 2 out of the last 5, so you start to get.
And that's
100%.
more than the appreciation on average.
A lot of times it is, and you're also paying any depreciation recapture that you took while that property was an investment. So it can actually, you think you're going to be able to just sell it and get out of it and be able to take all of that gain tax rate. It's not exactly how it works. You could still be faced with a very large tax penalty.
So what should you do alternatively?
So what I would do, what I've been recommending to people is, there's other issues with that, but the big thing, sell it. It's almost like you're getting a stepped up basis because you can take all of that gain tax free, go buy another primary residence, and then the rest of it you can take and go buy an investment property in Indy or wherever else, right? When you do it that way, now you actually have time to analyze the investment property deal as opposed to, hey, I'm just going to move out and rent it out. Because another big issue I see is, if people think that they're going to, let's say their mortgage payment is $1,500 and they're going to rent it out for $2,000, they're like, I'm going to make $500 a month. Exactly. Like, if you thought about operating expenses, it's like, well, what's that, right? Well, you're probably going to be cash flow
people
negative.
that are landlords that don't know how to calculate their own cash flow.
Well, this is a scenario with my first property. I was sitting there going back and forth. Should I sell? Should I rent? Should I sell? $900 mortgage payment. I knew I could get $2,000 a month.
Sure.
And I was trying to, when I pulled out the spreadsheet and looked at the capital gains, I was like, I have to rent this place out for 15 years to beat the exposure that I'm about to put myself at when I could simply just move. I put 3.5% down on the next house. I could pay the monthly. It's like whatever interest is, it's going to be okay. I got a 4% commission on it. So $0 into my new primary. It's a liability. And that's how I'm treating it.
You gave yourself a 4% commission?
No, on my new house. Buy side.
I was like, dude.
Buy side. Got 4% commission. So
give the brokerage that money.
0. Yeah, no. That was on the buy side. You're not going to, and it was FHA, so I couldn't bake it into the settlement. You had to actually take the commission. On the other side of things, that property became 3 houses.
Right.
That one became my primary and 3 rentals.
Right.
And now those 3 rentals, they're exposed to gain, but that's a cheat code. I just completely
There's so many advantages to using your primary as the actual investment.
What about for a house hacker?
Advantages.
Like a house hacker that's getting a duplex. That's the whole purpose, right? Is to buy an investment.
I think the whole idea is the 2 units, right, would help you cash flow surpass
out of it.
I don't know.
I think that's a huge cheat code too, because you're essentially buying like 2 units, right? 2 doors. You almost have your primary and an investment property growing tax-free from capital gains perspective.
The way I'm starting to think about all my residential investments is in 5-year spurts. I'm not thinking invest 5 years. Oh, I'm going to buy this and pay off the 30-year mortgage and then cash flow it. Maybe when I'm 40, I'll switch into that game plan. But I'm thinking in 5-year spurts because the appreciation, the return on equity becomes so low once you've owned it for 5 years that I could buy 2 to 3 at a higher cash on cash clip, that it makes no sense for me to continue to own this unless I just wanted to be hands off, I'm done, I don't really care, which we may get there. Right. Right? I don't know if you think about it that way at all, but I like to turn over the cash a little quicker than I think a lot of people want to do.
That's been my strategy for a long time. And honestly, I think buying investment properties is one of the fastest ways to be able to pay off your primary residence mortgage, because that property is going to appreciate often a lot faster than you just, shelling away cash into your mortgage and trying to pay it off faster.
Yeah.
Right.
So I love that strategy of like 5 to 7 years. Because eventually that equity that's sitting there is going to be super lazy. and you can do so much more with it that you've got to reinvest, you've got to redeploy, you've got to do something else with it.
Yeah, Tyler hates it, but on my asset, when I look at my spreadsheet of what I own, my primary is on my liabilities and all my rentals are assets. And he's always like, that you can build through owning home. You're supposed to own homes to build equity. I'm like, yeah, but my wife wants nice things in home. Home no longer makes sense.
Well, maybe once you pay off the mortgage, would you consider it on the other side or no?
Maybe if I was using it as like a bank account as a HELOC, but then it's a liability again.
It depends. The answer to that question on if your primary residence is an asset or not, I think it depends to me. Like, what is there strategy to it, or is it big, expensive?
No, I think it's a liability through and through.
It's
an emotional purchase.
You're more of like the Kiyosaki, like it's a liability because it's taking money out of your pocket.
Yeah, flipped 18 of their own homes and retired off that.
That's an asset.
So
that's a full-time job.
Actually, it was a job.
It's a full-time job.
They got some sort of job. They literally moved 18 times.
Yeah, that's my version of hell on earth.
Yeah. So they just love flipping their own home. They just bought low, sold high, bought low, sold high through the 80s and 90s and 2000s.
I don't know.
Yeah.
What
Just
do you
kept
think?
fixing them up along the way.
Liability or asset?
They would own 2 years, capital gains exclusion, then move.
Okay.
That kind of makes sense.
I tend to think it's more of a liability, if I'm being honest. That being said, if you can find ways to make money with your property, like place where it now has a carriage house on it, maybe you could build an accessory dwelling unit on your primary residence, convert a detached garage into something you can rent out. Then it's kind of a hybrid of an asset liability, right? So
I guess that starts to make sense.
I agree. I do think you guys this makes sense.
Yeah. The scarcity behind it is that somebody listening that is a renter, not owning a home, goes, well, I'm just trading a liability to a liability. No, you're leveling up your basis, which is what you said a couple, and you're getting to level 1. And then whenever you go to level 2, you're selling that one, getting the tax sheltering, which you're saying that's the best profit center. And then you continue to level up through that using your primary as the basis. So it's like you go from 1 to 3 to 6 to 12 to 24, which I think is the whole census of how to do it.
I mean, you have to have a place to live.
Right.
Right. Like if I have to choose between renting, owning a house, or living on the street, like I'm going to own a house all day long because I'm getting a roof over my head, but I'm getting that principal pay down. I'm getting that future long-term growth. So, I mean, the statistics are all over the place. Like homeowners are 44 times wealthier than a renter, right? Like,
my liability is just different is what I'm saying is because you have that homeownership. Where is the curve though right now on rent to mortgage payment ratio? Because that's the other thing. That's the other side of the coin. For me, my monthly living expense got cut not only in half, but like it was 30%. I was paying almost $2,000 for a 2-bedroom apartment nearby. And then I fixed up a 3-bedroom, 2-bath home. I was paying $900 a month for. Right now, what would happen? You go from that $2,000 apartment that still is about the $2,000 number. Mortgage, same house, might be $2,000.
Unless you get a roommate, unless you get a tenant, or you get any kind of multifamily, right? I mean, if I was to start all over again, I wouldn't have bought a condo for my first place. I would have bought a duplex, a triplex, quad, any of those, right? Because even if the mortgage payment is, let's say it's like, I don't know, $5,000 a month for a quad, I'll just throw that out there. If I can rent out 3 different units for $2,000 a piece, well, now at that point, my expenses are very low. I'm not getting into, operating expenses and whatever else, but if you have a 1-unit place, you can rent out a bedroom. You can do short-term rentals or whatever to help offset some of that expense, right? So I think it's just, affordability is a huge concern today for a lot of folks. But I think if you can get creative and talk to people like yourselves to figure out a game plan, like you can make homeownership more affordable, but you've got to be willing to do things differently. I think it's going to take some creative problem solving in the years ahead.
Does the 50-year mortgage solve that?
Gosh, I don't know. I mean, right now, would I take out a 50-year mortgage at 6%? Maybe. I mean, who keeps a mortgage for 30 years?
Right.
No, I mean, you can prepay that mortgage in 30 years if you wanted to.
Yeah.
If I could borrow, let's go back to 2020 and 2021. Could I take out a 50-year mortgage at 2.5%, 3%? All day I would take that deal. Are you kidding me? I want to borrow that money for as long as I possibly can.
Flow. That's what people are missing when they say, oh, you're going to pay $1 million in interest. you're not going to pay $1 million in interest because you're not going to own it long enough.
Yeah, you're not going to keep the mortgage that long. I don't know any single person that has kept a mortgage for 30 years, let alone kept a house for 30 years.
Right.
I mean, that's so
that's
rare.
what we talked about, using it as a bridge, and then when rates drop, refinancing into a shorter term.
Right.
Which is so I'm not scared of them. I hate all these doomsayers. 30-year mortgage. You know, you're gonna ruin your finances if you get there. You're like,
Okay.
Geez, bro.
So
you had a bad day.
and this is coming from the mortgage guy, but I've written articles on this. I hate the 15-year mortgage. I think it is one of the worst mortgage products that exist. And I say that because if you take a 30-year mortgage, this is how I explain it to clients. Okay, so let's say your interest rate on a 30-year mortgage right now is 6%, and then your interest rate on a 15-year mortgage is 5.5%. What's the interest rate difference?
I'm sorry.
6% on a 6% on a 30-year fix, and 5.5 on a 15-year.
0.5.
0.5 for 15 years.
Yeah.
Okay. If I'm a financial advisor and I come to you and I say, hey, Tyler, I want you to invest, what do you think the payment difference might be on a 15-year fix versus a 30?
$300 cheaper, $200 cheaper.
Yeah, depending on the loan size too, right? Sometimes it can be $1,000 a month for a 15 versus a 30. Yeah. So if I come to you and I say, Tyler, I want you to invest $1,000 with me for 15 years, and the best rate of return you can hope to gain is 0.5%. Do you want to invest your money with me? $1,000 a month, and you can't stop.
I think the rationale is not that though, right? It's to pay it off quicker.
But that's not what I've considered, because the rates usually are better on 15, right, than 30.
I don't think
how
most
much
people
better
do it
for
a better interest rate.
But how bad?
Why do they do it?
To pay more principal quicker.
Right, but you could pay more principal on a 30. But how bad does the 50 get? How much higher is the 50 going to be? I think that's the question that maybe has.
So yeah, why are we not then arguing the 50 is better then by the same logic?
Right.
Well, you could, because cash flow is really important. I don't think that's something that a lot of people consider. Every time that I've analyzed a 30 versus a 15, the reason that the 15-year mortgage gets paid off faster and saves people tens of hundreds of thousands of dollars of interest is not because the rate is lower. It's because the payment is higher.
Right.
You can, just like he's saying, you can prepay a 30-year mortgage in 15 years, and that payment is about the same. Like, I've done it many times. One time I just took the payment, made it the same as the 15-year, and it paid off in 15 years and 9 months. Like, it's a nominal difference.
That's actually hilarious.
Yeah, it is hilarious.
So then it's like, well,
screw the 15-year.
I mean, that's what I'm saying. That's why I think, because I look at it and say, okay, if I had an extra $1,000 a month, could I invest that over here and earn 8% or 10%?
So you could do the same
12?
with the 50. You could just put more principal and you'll pay it off in about 30 years.
Correct. So it's taking that excess cash flow and figuring out, can I generate a higher rate of return by putting that money over here as opposed to putting it into the mortgage?
That's fascinating.
See, I don't take my own capital to pay more towards mortgages. I just save it. Because
you're going to say you spend it.
No, I just save it, like, to buy more proproperties.
No,
but
I thought you were going to say my wife spends it.
No, that's usually my.
I do have to say this.
Siri takes so many hits. Oh, the podcast.
I do have to say this with a grain of salt.
Right now.
Like, I think there's a risk component that we have to manage too. Do I want to be in debt for 50 years? Absolutely not. I don't think anybody does. No. Right. But can we achieve that financial freedom faster with a different strategy? You can't forget about the risk component. The risk component's always going to be there.
Yep. Yeah, I just looked in, like, if you actually did take the 15, 30, and 50 on a 500K loan, 5% down, 6% interest rate, the interest doubles throughout each one. So it's 250 to 500 to $1 million on how much interest you'd pay to the totality of the loan. But the monthly payments also, one from the 15 to 30 almost cut in half. And then again to the 30 to the 50, it only cuts by like $200.
I mean, that's not much then.
Right.
So maybe the 50 year
because the 30 you are barely paying towards the principal already.
Right.
And you just add, it's 360 months for the 30. I don't know how long that would be for the 50. 600 months, right? Yeah. Wow. That's not like, I don't know. It's an extra $12 saved in the principal.
I don't know.
Net. Yeah. Well, before we let you out of here, we have a segment that we like to call Taking Root. Gonna hit him with the first question.
Yes, absolutely. I'm changing up the first question. Hope you don't mind it.
Let's do it.
Because I have a bigger curiosity that I want you to answer, which is what do you like more about Indiana versus Colorado? Because you lived in Colorado about half your life or so. Like, What did you make that change?
Indiana is definitely becoming more landlord friendly than especially like Denver, Colorado. It's becoming very strict on some of the laws for landlords in specifically Denver, but I think Colorado as a whole is starting to transition that way. We're more anti-landlord friendly. So that's one reason. Two is just better rent to price ratios out here. Colorado is insanely expensive, especially in the Denver metro market. Incomes are higher out there, no doubt too. But yeah, I don't know. There's better rent to price ratios in Indiana. We also have a very diverse job market here. I mean, there are so many different companies that are fairly recession proof. So great market to invest in is Indy.
And your favorite place to grab a bite to eat in Indiana?
Change that.
Okay.
What's the favorite place to grab a bite to eat in Nashville, Indiana?
Thank you. Thank you. Because I definitely know Nashville a little better. If I was going to Nashville, I would definitely stop off at Bird's Nest Cafe. Hands down, my favorite. The food is great. The atmosphere is great. Their menu is incredible. They change it up every so often. But yeah, go to Nashville, get the, the French toast from Bird's Nest Cafe. You will not be disappointed.
If you haven't ventured out and come to Indy and gone to Nashville, Indiana, and kind of traveled outwards, it's like you enter a different land per se. Like it's not a bunch of cornfields and what people imagine. It's these beautiful like landscapes of what feel like mountains when you're there. Sure. I don't know elevation wise, I don't think they actually are. They're not Colorado by any means, but it's just this beautiful landscape. And in the fall, oh my gosh. It's like, should be the wedding capital of the world. Wedding pictures are phenomenal through there. What's one habit that's changed your life?
Being grateful. I would say something I like to do, especially like with my wife and my kids every day, is we just share our gratitudes. It can be simple things. It's simple stuff like, I'm thankful that we have heat in the winter, but a lot of times will try to add a little bit of reflection on where I am today versus where I was 10 years ago. And it's amazing. Like you have this vision in your mind of who you want to be when you grow up. And the where I'm at now is who I wanted to be 10 years ago. Right. And I'm so grateful and appreciative for the people that have come into my life. And I try to take stock of that whenever I can, because, hard work and a plan and just being persistent will get you there in time. So yeah, I would encourage everybody to just today, if you're listening to this, what's one thing that you're grateful for?
I love that. I love that. Seth is a sponsor of our masterclass event. If you guys don't come out to any of our events, please do and try to connect with Seth while you're there. He's been a huge support of Roots on the financial side for sponsorship, but also on just being an awesome lender and taking care of clients on that side as well. So if you need a loan, call Seth. He's going to get you taken care of. And this has been another episode of the Roots Podcast. Thanks for coming on, Seth.
Thank you guys for having me on. It's great to be here.
Yeah, it's been awesome.